The United States is unlikely to default on their debt, and betting that the United States is going to default is really a poor bet. I have three hot stocks that are skyrocketing in spite of the current conditions that I want to share with you. I am Dr. Stephen Fox. These are my personally selected stocks. This is not financial advice, as I do not know your personal situation. Hey everyone, welcome to my channel. I don't think I've ever seen us waiting for a recession this long in my life. You know, when the 2008 recession came upon us, it really was kind of a surprise. we didn't realize what was going on totally with the housing market. I was told by a banker about 2 years before what was going on, but it wasn't widely distributed and publicized. Now, for the last year at least, we've been saying, yeah, the recession is coming, the recession is coming. And meanwhile, we've had one of the lowest unemployment rates in history at 3.4%. People are still spending money. Retail sales show that people are spending money, the most recent one. And inflation is getting conquered. Trueflation, which uses more data sources and is more current, says that the inflation rate is 3.36%. You know, it was over 10% or near 10% earlier. That's major progress, people. Of course, is this a sign we're going into recession? I don't remember people spending money in 2007, 2008 like there was no tomorrow. And in some cases, especially in travel, that's happening. A recession's coming. People usually don't say, "Oh yeah, let's take a vacation to Europe." You know, this does not happen. And also, you have people, especially some YouTubers, are saying, yeah, we got to get ready for the recession. Let's buy 20-year bonds and let's buy inverse funds. Hey, have you looked at the VIX lately? You know, the VIX should be below 20. It's a measure of volatility. The VIX is up when it's likely to be a worse bear market. If it's below 20, you're typically in a bull market. Right now, the VIX is at 18, okay? And I've been making money on going to some of my old favorites, which I'm going to share with you when I get done ranting on this. But the 20-year bonds, so far, they bought them way too early. You wait until they officially pause, and they're not going to pause until the next meeting in June. So you got plenty of time to buy the 20-year bond, okay? So far, it's been a losing proposition. You've not made money on it. It's been foolish. Inverse funds, I made $350,000 last year, and that's in spite of losing money on trying to establish bullish trades, but they kept falling apart. But in spite of the losing the money on trying to create trades, I made $350,000 overall, above and beyond the losses, simply because I used inverse funds. I got news for the YouTubers that are buying inverse funds now. The time to do that was last year, not now. You know, it's going to be a disaster you're buying inverse funds, except if the United States defaults on its debt. Okay, you got at most a 10% chance that could happen. Okay, you do have the 10% chance. It could happen. I could be wrong. I got a 10% chance of being wrong. I got a 90% chance of being right. You know what? I'll take those odds. Okay? And if I'm wrong, I'm wrong. But I don't think you bet the farm on a 10% chance. You put a small amount of money into that 10% chance if you're absolutely sold on it. And looking at history to say that what's going to happen, have we ever experienced anything quite like this? You know, when I look at history and look at uh, how what things have progressed and what things have regressed, the only time I can find any similarity to what's happening now is World War One. Okay, that's over 100 years ago, people, and that's the only time when we had a war, and we also had health problems. Okay, and what happened after those two things happened? We had the Roaring Twenties. Okay, I think we're on the brink of the Roaring Twenties, and if Congress is not idiotic and they pass the debt ceiling, they raise the debt ceiling, and they recommit to the United States paying its debts, which we always have done. So I'm betting on the 90% chance that we're not going to default. Okay, there's that 90% chance. I'll take a 90% chance anytime. My favorite stock is Super Microcomputer, SMCI, and it is a superstar. It's made 477% in the last 3 years. It's made 54% in the last 3 months. It's made about 177% in the last year. And it still has room to run. They're a computer maker that also does storage, and they do servers. They do 4-socket servers and 8-socket servers, I guess, is a specialty of theirs. So it's only a $5 billion market capitalization. There's lots of growth ahead. I sometimes feel a little bit like I'm investing in Tesla in its earlier days. I don't think it's going to be that wild, but I can't ignore how good it is. Looking at the 5-day chart, it went up about 10 points in the last 5 days. It finished those 5 days at a little bit of a low point. It went up to like 147 and it came down to 145. Those are the Bollinger Bands you see around it. That's a 95% probability of where the price is likely to fall. Its relative strength is 42. It's neither oversold nor overbought. So it's still a relatively good buy when its value is calculated to be about 191. On Semiconductor, symbol ON, is a favorite of mine. I've been in and out of this stock for years. It's a trading stock. I like to follow stocks and trade in and out of them as the situation requires. And semiconductors have been doing relatively well in spite of the situation we're in right now. And ON has done well. In the last 5 days, it's gone from like 80 to 83. Its price to earnings is only 17, which is low for a semiconductor company, and its earnings growth rate is about 25%. So this is a stock I don't worry about that much, and I will be in and out of the stock. It's a long-term trade. I mean, it's a long-term hold for me in many ways. It's just when things get a little shaky on the macro level, I tend to get out of it, but I always get back into it. And when I get back into it, I force myself to buy more than I was going to punish myself for getting out of it. So I think it's a good solid stock for the situation we're in. And looking at the chart of ON, its relative strength is 61, which is good. And I wanted to show you the 1-year chart as it has a nice growth. It's gone up 50% in the last year, which is outstanding given how bad the past year has been. Semiconductors are the new oil, and we need them. and this is a good, solid semiconductor company that hasn't let me down, hardly ever. My favorite mega cap right now is Google. I use GOOGL is the symbol. And I tend not to rely on statistics so much with the mega caps because so much is wrapped up in their future. And they sort of defy statistic explanation anyway. But its price to earnings is 22, which for a mega cap is really reasonable. And they have all kinds of wonderful news lately. They made a chip lately that they said made a computer run faster than it would run if it was on NVIDIA's chip. So it was kind of a wake-up call for NVIDIA. And they're coming out with a flip phone they're excited about, but that's not the big deal. The big deal is Bard and artificial intelligence. And it's based on their reputation. I think in some ways, I think of them as the original artificial intelligence company in many ways. And I think they will be just as successful with that as they have been with their search engine and with YouTube. And so I think this is a good company, and it's recently taken off. And looking at the year-to-date chart on Google, you can see that it's had a nice upward course year-to-date, and it's made about 35%. Its Bollinger Bands are around it, and it's recently had an upsurge, so it's had a breakout to some degree. It went from 108 to like 119. So I think a lot is being expected of this company, and it's at a reasonable price, and we want a mega cap that's at a reasonable price so that if the market does go down, that it won't be affected too much. Its relative strength is 75, which is good. Be sure to smash the like button if any of this has been useful for you. And I think we're in a phase now where the market it can really take off. If the debt ceiling is passed, I think we have happy days ahead. We will have the new roaring 20s. And I think technology is going to lead the way. And that's obviously the way I'm going you can see from the stocks I've presented to you today. I think these are relatively safe stocks. I've been careful to pick companies that are not terribly overvalued. They're mostly undervalued. The mega caps are always a little bit overvalued. But I've got, with Google, I've got one of the mega caps that's the least overvalued of the mega caps. So I think this is good fortune and good luck ahead if they pass the debt ceiling, and there's only a 90% chance of them doing that. Please don't bet on the 10% chance. I mean, there's a lot of bears that are going to bed at night praying that they don't raise the debt ceiling, because it will be a disaster and there'll be a catastrophe. But there's only a 10% chance of that. And I'm hoping we get on a little more rational basis with our Congress. Thank you for listening and watching. Take it easy, and good luck to us all.